Welcome back to the Deep Dive. It is the week of January 12th through the 18th, 2026. In the research notes we have in front of us, they're referring to this specific time frame as 26W3, which, I have to be honest, sounds a little bit like a droid from Star Wars, but it actually felt a lot more significant than just a code on a calendar.
It really did. And, usually when we sit down to do these deep dives, we're unpacking a singular, loud event, a crash, an election result, a breakthrough, but 26W3 was different.
It was strange, right? If you were just scrolling through your feed or watching the evening news, it might have looked deceptively quiet. There wasn't one single breaking news banner that stayed up for 24 hours. There wasn't a massive explosion that took over every screen. But when I dug into this stack of reports you sent over, and we're talking defense analysis, trade papers, market data from Tokyo, there is this underlying vibration.
A vibration is a good way to put it.
It feels like the floor is tilting just a few degrees under our feet. You don't see it yet, the furniture hasn't started sliding, but you can feel that your balance is just slightly off.
That is the perfect image for this week. The tilting floor.
Mm.
Because this wasn't a week of events, it was a week of structural failure, or at least structural wobbling. We have three main pillars that hold up the global order: how we fight wars, how we trade with friends, and how we share technology. And in 26W3, all three of those pillars started to wobble at the exact same time.
And that's our mission today. We aren't just reading headlines. We need to figure out why these systems are shaking and what it means for the rest of 2026. I want to play the role of the questioner today. I want to bring the skepticism, the daily life reality into this, because a lot of this data seems abstract or even contradictory.
And that's exactly what we need. I'll take the role of the observer. My job is to step back and look at the patterns connecting these things to find the structure behind the noise. Because the theme of this week is assumptions crumbling.
Assumptions crumbling, that sounds ominous.
That's not necessarily ominous, but it is disorienting.
Okay, let's map this out. Looking at the outline, we have three distinct wobbles. First, the war in Ukraine, which seems to have shifted into a new, darker phase involving energy. Second, a bizarre trade dispute involving, and I can't believe this is real, Greenland.
Yes, Greenland. It sounds surreal, but it's critical.
We will definitely get to that. And third, the world of AI chips, where the U.S. government seems to be flipping switches on who gets to build the future.
War, trade, and tech. The trifecta.
Let's start with the war. Ukraine, we've been covering this for a long time, but the reports from January 18th highlight a shift. We saw large-scale drone attacks targeting power and heating infrastructure. Now, to be the skeptic here, Russia has attacked the grid before. We saw this in 23-24. Why are the analysts flagging this specific wave as a structural shift?
It comes down to the efficiency and the intent.
Yeah.
In previous years, those attacks were often about causing temporary blackouts to disrupt military logistics. Turn off the lights so the trains can't move. What we saw this week is what military theorists call targeting civilian absorption capacity.
Civilian absorption capacity. That is a very clinical way of saying freezing families to death, isn't it?
It is brutal, but that is the strategy. The shift is away from the front line, the trenches, the tanks, the lines on a map, and directly into the living room. The battlefield is no longer a field, it's the urban center. And the weapon isn't just the drone, it's the calendar.
Winter as a weapon.
Precisely. We're in mid-January. Think about the physics of this. If you knock out power in July, it's an economic hit. The AC goes off, factories stop, food spoils. It's expensive, but it's not immediately fatal. You knock out power and heating systems in January, specifically district heating pipes that can freeze and burst if the water stops flowing.
Yeah.
You are creating an immediate survival crisis.
And the reports mention the scale of these drone swarms. It's not just a few missiles, it's hundreds of cheap drones.
That's the cost asymmetry problem we've discussed before, but it's hitting a breaking point. If Russia sends a $20,000 drone and Ukraine has to shoot it down with a $2 million interceptor missile, the math eventually breaks the defender. But this week, the target selection was different. They weren't just hitting the power plants, they were hitting the distribution nodes. They're trying to make the grid unfixable for the duration of winter.
So if the goal isn't just to win a battle on the ground, what is the strategic endgame here? Is it just cruelty, or is there a negotiation tactic hidden in this?
It's entirely a negotiation tactic. Think of it as a pressure gradient. It starts with the family freezing in a Kyiv apartment. They can't stay, the pipes are burst, so they move west.
Creating a new refugee wave.
Right. Millions of people moving toward the Polish or German borders in the dead of winter. That puts immense strain on European social services, housing, and budgets. That flows up to the political leadership in Berlin, Paris, and Brussels. Suddenly, the conversation in Europe shifts from how many tanks can we send Ukraine to can our own economy survive another refugee crisis?
It's driving a wedge between Ukraine and its allies by making the war personally expensive for the European voter.
Exactly. It turns energy infrastructure into a diplomatic weapon. The missile hits Kyiv, but the shockwave is meant to be felt in the German parliament. It forces them to ask, how much of this can we absorb?
Which explains why we're seeing those frantic diplomatic cables in the source material this week. Everyone knows the clock is ticking on the temperature. It's not just about hold the line anymore, it's about holding the society together.
And that anxiety brings us directly to the second wobble. Because just as Europe is grappling with this security crisis on their eastern border, they get hit with the trade shock from the West.
This is the headline that I honestly thought was a typo. January 18th, reports surfacing that President Trump is floating additional tariffs on European goods. But the context links these tariffs to negotiations over Greenland.
It sounds like a bad techno-thriller novel, doesn't it?
It sounds insane. We're talking about buying an island in 2026 and threatening to tax French wine and German cars if they don't help facilitate what exactly? A real estate deal.
Well, let's peel back the absurdity and look at the structure, because if we just laugh at it, we miss the point. This is the death of the old assumption that economics and security are separate tracks. For 50 years, the rule was, we are NATO allies, so we defend each other. And separately, we trade, and sometimes we argue about cheese or steel prices.
Right. You don't threaten to pull out of NATO or destroy the German auto industry because you don't like the tariff on Gouda.
But that wall is gone. This is the era of geoeconomics. The U.S. administration views Greenland as a critical strategic asset. Rare earth minerals, control over the Arctic shipping routes, missile warning positioning. To them, it's not an island. It's an aircraft carrier made of rock that happens to be sitting in a very strategic location.
Okay, I get the strategic value.
Yeah.
But holding the European economy hostage for it, that feels like treating allies like, I don't know, vassals.
It's transactionalism in its purest form. The argument is, we provide your security shield against Russia. In return, we expect economic concessions that enhance our strategic position. The Greenland tariff link is basically saying, we are negotiating your security alignment via your wallet.
This must be causing absolute chaos in the markets. I mean, if I'm a CEO of a European manufacturing company or even a U.S. company with parts coming from Europe, how do I plan for that?
You can't. And that is what we call the shear effect.
Explain that. What is the shear effect in this context?
Imagine you're an investor. You can handle bad news. If taxes go up 5%, you update your spreadsheet, you grumble, you maybe cut a few costs, and you move on. But you cannot handle randomness. You cannot handle the operating system of the world changing overnight.
Because if a trade war can start over an island, it can start over anything.
Exactly. The membrane between the U.S. and Europe is under extremely high tension. If the rules are now trade depends on total strategic alignment, then every business deal has a political risk premium attached to it.
So we saw markets panic this week, not because of the math of the tariff markets can do math, but because the logic of the alliance is breaking down.
Correct. They are hoarding cash. They are pulling back investment. Because if the U.S. can weaponize tariffs against its closest friends over a real estate deal, no supply chain is safe. The premise of the transatlantic relationship was stability. That premise just crumbled.
It really does feel like everything is getting mashed together. War is infrastructure. Trade is security. And that leads us to the third pillar, technology. Because here, too, the lines are getting blurry. This is the AI gate.
This one is fascinating because it touches on the invisible plumbing of the modern world. On January 14th, we got a report that the U.S. administration gave the green light for NVIDIA to sell certain high-end AI chips to China.
And this is where I got confused. I thought we were in a chip war. I thought the whole point of the last 3 years of policy was to lock this stuff down, to keep the most advanced AI hardware out of China's hands. Why open the gate now?
It seems like a paradox, doesn't it? If you look at it purely through a security lens, keep the bad guys from getting the technical dish, it makes no sense. But you have to look at the leverage lens.
Okay, walk me through the leverage.
We are moving from an era where technology value was based on performance. How fast is the chip? How good are the benchmarks? To an era of permission. The value of NVIDIA right now isn't just that they make the best silicon. It's that they are the instrument of American foreign policy.
So the U.S. government is using these chips as a carrot.
It's a dimmer switch. The U.S. government has realized that a total ban forces China to build their own indigenous alternatives faster. If you cut them off completely, they have nothing to lose. They go all in on domestic innovation. But if you let them buy some chips that are slightly downgraded, or chips that come with license strings attached, you keep them dependent on your technology stack.
Ah, so it's a leash. You give them just enough to keep them hooked on NVIDIA's ecosystem so they don't go all in on building their own.
Exactly, it's a calibration. But think about what that means for an investor. If you own NVIDIA stock or AMD or any tech giant, you aren't just betting on their engineering team anymore. You are betting on the political whims of the White House.
Or Policygate.
Yes, a single regulatory decision, a piece of paper signed in Washington, can rewire global revenue streams overnight. We saw NVIDIA's stock jump on this news, but it's a fragile jump because that gate can slam shut again tomorrow if a diplomatic talk goes badly.
It creates this weird tension. You have market openness, companies want to sell, shareholders want profit, and you have national security governments want control. Who wins?
Right now, national security is winning, but it's using market openness as a tool. It's weaponizing the market. It's telling the tech companies, you can sell, but only when we say so and to whom we say so.
So let's recap the three wobbles. We have Ukraine moving to energy warfare, attacking the civilian capacity to endure winter to force a political crisis. We have a trade shock where tariffs are being used as a security language, even against allies. And we have the AI policy gate, where permission to sell is a diplomatic lever.
It's a lot. And if you want to see what happens when all these forces collide, security, politics, and markets, you have to look at the canary in the coal mine this week, Japan.
Japan. I saw the notes on the yen and JGB's Japanese government bonds jumping around between January 12th and 14th. But I usually think of Japan as the boring, stable part of the portfolio. Why are they the warning sign here?
Because in Japan this week, the market moved before the explanation arrived.
What do you mean?
We saw significant volatility in the yen and in government bond yields. The yen started sliding and yields spiked. Why? Because the algorithms and the deep-pocket investors started pricing in a political shift before the politicians even opened their mouths.
You mean the speculation about the snap election?
Exactly. There were rumors of a snap election and a new fiscal stimulus package. Basically, the government printing more money to win votes.
Which is standard politics. Politicians always want to spend money to get elected.
Standard politics,
Right.
but in a fragile global environment. The market did the math instantly. If they have an election, they spend money. If they spend money, they have to issue bonds. If they issue bonds, yields go up. If yields go up, the cost of borrowing breaks the budget.
And they just sold. They didn't wait for the press conference.
They sold aggressively.
Yeah.
It's a speed shear. The market is moving at digital speed, reacting to the structural instability of debt, while the politicians are moving at analog speed, trying to write speeches.
This is the danger of high debt levels, right? You don't have room for maneuvering.
That's the key. Japan is the most indebted nation in the developed world relative to its size. They are the test case. If the bond vigilantes can bully the Bank of Japan, they can bully anyone. It shows that you cannot separate a domestic issue, like a local election, from the global instability of interest rates.
It's all one giant sloshing bathtub of risk. If Japan's rates go up, that pulls liquidity out of the US or Europe, which affects their ability to handle the trade shock or the energy crisis.
And speaking of maneuverability or the lack of it, we have to touch on the boring macro number that came out. The U.S. CPI, inflation.
Right. December CPI came in at 2.7%.
Sticky. That's the word of the week.
2.7% doesn't sound like a disaster. I mean, we were at 9% a few years ago. Why is 2.7% such a problem?
It's not a disaster, it's a handcuff. If inflation was down to 1% or 1.5%, the Federal Reserve would look at all this global chaos, the war, the trade fights, the volatility in Japan, and say, okay, we can cut interest rates, we can print some money to cushion the blow.
But at 2.7%, they can't.
They are stuck. If they cut rates now to help the economy, inflation flares back up to 4% or 5%, so the central banks are handcuffed. They cannot ride to the rescue. That safety net we've been used to for 20 years, it's gone.
We really are operating without a net. You saw this in the oil markets too, right? Prices were bouncing all over the place on just rumors.
Trading on vibes. We call it fear gradients. Oil went up on a rumor of a pipeline attack, then down on a calming speech, then up again. The market isn't looking at supply and demand, it's looking at the headlines. That is a hallmark of a structurally unstable time. The market is nervous, it flinches at shadows.
So let's pull this all together. 26W3 wasn't a week of explosions. It was a week where we realized the rules have changed.
The invisible rules became visible, and they looked very shaky. The assumption that civilians are off limits in war, gone. The assumption that allies don't tariff each other, gone. The assumption that tech companies just sell to whoever pays the most, gone.
It feels like we're watching the source code of the global order get rewritten in real time, and the new code is full of bugs.
That's a great analogy. And that brings us to next week.
Right, looking ahead, we have the World Economic Forum in Davos starting January 19th. The elites on the mountain. Usually I tune out the speeches because they feel, well, rehearsed. PR fluff. Building a better future and all that. But you think this year is different.
I think the speeches will still be rehearsed. Ignore the main stage. The mission for our listeners next week is to look at the cracks.
What specific cracks should we be watching for?
Two things. First, watch the body language between the U.S. and EU delegations. After this Greenland tariff shock, can they paper over that split? Or will we see cancellations? Will we see scheduling conflicts where leaders refuse to meet? That will tell us if the alliance is truly fracturing.
Okay, watch for the snub. What's the second?
Ukraine. With the shift to energy warfare in the freezing winter, listen for the quiet framework. Will we start hearing whispers of a ceasefire or a frozen conflict scenario, not in the press releases, but in the leaks? The pressure on Europe to find a deal, any deal, is spiking.
Because winter is winning.
Because winter is winning. And finally, I want the listeners to watch for normalization.
What do you mean by that?
We've discussed some extreme things today. Selling islands for tariffs, freezing cities, politicized chips. The danger is that we stop seeing these as exceptional measures and start seeing them as business as usual.
The new normal. I hate that phrase.
It's a dangerous phrase. If we accept that trade is war and war is energy, the world becomes a much more volatile place permanently. The question isn't, when will it go back to 2019? The question is, how do we operate in a world where the premises change every single week?
That is a heavy thought to leave us with. We have to learn to walk on a tilting floor.
We do.
Yeah.
But recognizing the tilt is the first step to keeping your balance.
Well, I certainly feel a little more balanced, or at least I understand why I'm dizzy. Thank you for walking us through the structures, not just the headlines.
Always a pleasure.
And to you, listening, keep your eyes on the background, not just the foreground. Watch the structures. We'll be back next week to see if the floor is settled or if we're in for another slide. This has been The Deep Dive. Thanks for listening.